Let's, keep it a bit with the earnings. We have Castrol India, which reported its Q1 current year 22 numbers. Revenue up by 9%, but profits seeing a decline of almost 7% coming in. We are joined by the management today. We have Deepesh Baxi, who is the CFO and Wholetime Director at Castrol India. Thank you so much, Mr. Baxi, for joining in with us on ET Now. And sir, I'm going to jump right in. And, firstly, what were the sales volume in Q1 current year 22? If you could tell us the overall sales mix, your volume, when you look at it, grew by around 14% QOQ, but your revenue has increased only by 13% QOQ. So what is the overall perspective coming in terms of that in volumes?
I think we've had a very good performance in this quarter of 2022, the first quarter. We have a Jan to December financial year end. And the volumes compared to 4Q 2021 have gone up by about 14%. I think the demand is coming back and we are being able to service our customers through the demand resurgence that we are seeing in the market.
Could you also take us through what the overall sales mix was? I'm trying to understand where the revenues have come from, how your individual segments have performed.
We have about 80 to 85% of sales volumes coming in from our automotive segments. And when I say automotive segments, it means personal mobility, which is cars, bikes, and commercial oils and commercial vehicles. And the remaining, 15 to 20% comes from our industrial businesses.
Right, Mr. Baxi, but I want to also understand, like I was talking before, your volumes, which grew actually by 14% QOQ, but your revenue has only increased by 13%. So, was the revenue growth largely on account of this volume and no impact of price hike?
No, I think it's been both. There has been a volume growth, but there was also a price hike because if you recall, in the whole of last year, we have had a significant impact due to the increase in our input costs, especially the base oil and additives. And Forex also was negative. So what happened is we made interventions in the market. We took price increases last year and we took also some price increase in the first quarter of 2022. So I would summarize by saying that there is a volume impact and a price impact both in the turnover increase.
Mr. Baxi, crude oil prices, of course, are something that you watch very closely and they've remained at elevated levels. So the price hikes that have so far been taken, what I'm wondering is, do they fully cover the increase in raw material prices that you've experienced, or are you considering more price hikes in the near future?
The raw material increase is concerned up to the month of March. I think we have covered fully. And there are trends of crude oil and base oil increasing in future. So depending upon how we see the trend, we will take a price increase as required. I think we keep a very close eye on our margins. So make sure that we take some price increases which are more strategic in nature rather than tactical.
Right, Mr. Baxi, but so on a quarter-on-quarter basis, your margins did improve, but compared to your earlier levels, your margins are still a bit lower. So going forward, should investors consider the current margin levels as the new normal, or is there a further scope of increase in margins?
So I assume when you say margins, you're talking about operating margins, and our operating margins are something that we try to keep in the band of 24 to 27%. And that 3% band helps us tide over any input cost increases or cost increases. And yeah, I would say that we will operate within that margin band for the near future. That's our endeavor.
I want to push back into volumes to try and understand if there have been any market share gains, any sign of recovery in the CV segment, because obviously we're looking at the auto sales data and we're still, I think, in early days. But what's the feedback that you're getting?
I think we've been doing very well on the market share. As you know, amongst the private players, we have the highest market share. In fact, in double digit. And from last year, continuously with the great focus that the management has on volumes and gaining market share, we've almost increased 100 to 200 basis points in market share. There are temporary blips that happen within the quarter or within the month. But I think market share is showing a very good story. As far as the CVO or the commercial vehicle is concerned, last year we had taken a pricing intervention on the reverse side as well to correct the premiums that were there in the market, and I think that showed the result in the first quarter results as well. So I think overall, market share is showing a positive sign for us.
And Mr. Bakshi, just want to understand what is the kind of volume growth that you're expecting from the lubricants market, and what is the growth target for Castrol for current year 22?
So, the lubricant market generally grows in the range of 1 to 2%. And as a management strategy, we want to make sure that we grow double the market growth. And that's the endeavor that we do. And, you are seeing very good results of that volume focus in our results as well. So very difficult to predict. There is a lot of, as you know, uncertainty in the environment and volatility. But having said that, growing above the market rate is something that we are aiming for.
Mr. Bakshi, for joining us. All the best for the rest of the calendar year.